What do you get when you mix tariffs, a Fed on edge, and a quiet regulatory pivot that flew under the radar? You get one of the strangest quarters crypto has ever seen in a long time. Bitcoin didn't crash, it didn't soar either. What we got instead was something in between: sharp volatility, scattered rallies, and a whole lot of confusion about where the market is actually headed. But beneath the surface, something deeper was shifting. While headlines focused on Trump's trade war and China's retaliation, the US quietly stepped back from one of its most aggressive crypto enforcement stances. No press conference, no major headlines, just a quiet signal that the era of regulation by prosecution might finally be winding down. At the same time, Bitcoin, long treated as a safe haven, started behaving more like a risk asset. It didn't act like gold. It moved in sync with equities. And that raises a bigger question. Is Bitcoin still the hedge people think it is, or has it become something else entirely? My name is Danilo, and today we're digging into what actually moved the crypto markets in Q1 and early April. Not just the noise, but the deeper signals that could be pointing to what comes next. We'll cover how geopolitical fear triggered real market swings, why the DOJ's policy shift matters more than most people realize, and what Bitcoin's price action is telling us about its evolving role in the global economy. If that sounds interesting to you, make sure to hit that subscribe button and ring the notification bell so you never miss future crypto updates. Alright, let's get into it. In just one 48-hour stretch this April, crypto traders saw both sides of the macro coin. One day, panic. The next, euphoria. It started with a sell-off triggered by China's tariff retaliation, shaving billions off the market cap in hours. Then came the rebound, fueled not by fundamentals, but by a single line in the press briefing: pause on reciprocal tariffs. And just like that, the market flipped. These weren't isolated events. They were a snapshot of how reactive and exposed crypto has become to global politics. The volatility we saw in Q1 wasn't just from within crypto. It was driven by macro uncertainty spilling directly into the space. Tensions escalated in early April when China hit back against Trump's latest round of tariffs, announcing an 84% duty on US goods. Bitcoin immediately dipped nearly 5%, falling to around 76,000. Stocks pulled back too, but the reaction in crypto was sharper and more immediate. Then came the reversal. Just hours later, the White House walked it back. Trump announced a 90-day pause on reciprocal tariffs, and the market snapped back. Bitcoin rebounded to 83,000, Ethereum followed. Even crypto-related stocks like Coinbase and MicroStrategy saw a surge. It was a full-blown whiplash moment, and it wasn't driven by anything happening inside crypto itself. This kind of price action tells you something important. Crypto is no longer just about innovation or hype cycles. It has become a live wire for global risk. When macro tensions spike, crypto feels it first. Part of that's because it trades 24/7, but it's also because the market is structurally more reactive, more leveraged, more sentiment-driven, and less buffered by institutional inertia. You could see it in the futures data. Open interest surged, liquidations spiked. Traders were positioning around macro headlines, not protocol updates, and that's a shift. And it's one that matters, especially if you're active in the market right now. And if you're more plugged into DeFi or NFTs than macro headlines, you might be wondering, why does this even matter? Because every chart, every token, every pool you're in is now reacting to decisions that have nothing to do with crypto. Ignoring it doesn't make the risk go away. It just means you're late when the market moves. That's part of the growing disconnect. Crypto is reacting to systems it still doesn't influence. Interest rates, trade wars, capital flows, none of them originate in this space, but all of them shape how it moves. And that's what makes the current environment so tricky to navigate. The fundamentals of a project might be technically fine, but one policy shift overseas can send the entire market tumbling. It's not about code anymore, it's about context. It also raises a question: if macro shocks are becoming the new norm, what kind of framework is crypto operating under? Who's actually defining the rules? And how are those rules changing? While traders were glued to price swings and tariff headlines, something quietly shifted behind the scenes. The US Department of Justice disbanded its National Cryptocurrency Enforcement Team, an agency once tasked with aggressively prosecuting crypto crimes and sending a clear message to the industry. But just like that, it was folded back into the DOJ's broader cybercrime division. No major press tour, no threats, no replacement announced. It might not sound dramatic, but it's a big signal. For years, regulation in crypto has felt reactive, chasing headlines, cracking down on platforms, and punishing innovation more than abuse. This move feels like the beginning of a pivot, not away from enforcement entirely, but towards something more focused. Instead of treating crypto as inherently suspicious, regulators are starting to treat it as part of the broader financial system. The DOJ's own language hinted at this shift. Their focus is turning into crimes like terrorism financing, ransomware, and organized fraud, serious issues where crypto just happens to be the tool, not the target. That's a different tone from the era where entire protocols were in the crosshairs just for existing. You can already see in how some teams are adjusting. Instead of launching anonymously or avoiding the US entirely, more founders are working with legal counsel early, setting up entities or trying to build with compliance in mind from day one. That wasn't the norm a year ago. The shift may be subtle, but it's encouraging. It shows people aren't giving up on building, they're just building smarter. And if that recalibration continues, the goal shouldn't be zero regulation. It should be smarter regulation, rules that separate innovation from exploitation, and builders from bad actors. It's not about giving crypto a free pass, it's about giving it a clear path forward. If we get there, we may finally see developers launch with confidence instead of hesitation. It comes at an interesting time. With tariffs rattling markets and Bitcoin behaving less like a hedge and more like a barometer for risk, regulators backing off the all-out war footing suggests something else. A recognition that crypto isn't just speculative noise anymore, it's infrastructure. And like any infrastructure, it needs oversight, but not a sledgehammer. For years, Bitcoin has been pitched as digital gold, a hedge against inflation, instability, and political risk. But lately, the data tells a different story. During the same stretch where gold rallied on global uncertainty, Bitcoin dipped. And when stocks recovered on hopes of a tariff pause, Bitcoin surged alongside them. That kind of movement doesn't look like a hedge. It looks like correlation. And that's exactly what recent analysis has shown. Bitcoin is behaving less like an alternative to traditional markets and more like a leveraged extension of them. When macro jitters hit, it doesn't offer protection, it amplifies the move. That said, this isn't the full picture. In countries with currency instability or capital controls, places like Argentina, Lebanon, or Turkey, Bitcoin still plays a different role. In those markets, it functions more like a hedge, even if it doesn't behave the way in the US-led trading pairs. The safe haven narrative isn't dead everywhere, it's just fragmented. Depending on where you live, Bitcoin might be a macro asset, or it might be the only alternative to a devaluing national currency. Now keep in mind, this isn't necessarily a bad thing, it just means Bitcoin's role is still evolving. In times of deep uncertainty, it's not where capital is fleeing to, it's where capital is rotating out of. That puts it in a weird spot. It's still seen as revolutionary by many, but it's being traded like a high beta risk asset. Some argue that's just part of growing up. That as Bitcoin becomes more integrated into the broader financial system, it's going to behave like other assets in that system. But others see that as a problem, because if Bitcoin can hold up when the rest of the world feels unstable, then what exactly is it hedging against? These aren't just philosophical questions, they matter for everyone in the space. If you're building around Bitcoin, trading it, or just trying to understand where it's headed, you have to ask, is this still the hedge we thought it was? Or is it something else entirely now? So, what do you think? Is Bitcoin still your hedge, or is it just another trade in your rotation? Let me know in the comments. I'd be curious how your view has shifted. So, what do we actually take from all this? The market's been pulled in a dozen different directions, by tariffs, by politics, by volatility, and now by shifting regulation. But depending on who you are in this space, the lessons are a little different. Stick with me here, because in the next minute, we're not just summing things up, we're putting this into perspective in a way that matters more now than during a bull run. If you're a trader, the biggest thing to watch isn't just crypto-specific news anymore, it's policy. The biggest moves this quarter came from outside the industry, trade tensions, interest rate speculation, and geopolitical signaling. That means headlines matter, not just charts. And volatility isn't going away. If anything, it's becoming more unpredictable because the triggers are no longer just in crypto's control. And if you're a builder, this DOJ pivot should be on your radar. For the first time in a while, regulators aren't treating crypto as the enemy by default. This doesn't mean it's open season, but it does create more breathing room. We're not in full clarity yet, but the phase where every launch feels like a legal risk, that's starting to crack. And that's a shift worth paying attention to. And if you're new here, if you're just starting to learn about crypto, trying to make sense of all this, know this. Most people only show up when prices are pumping, but real understanding, real edge, is built in moments like this. When things are messy, when nothing is obvious. If you're still watching, you're ahead of most. There's a lot we still don't know, but what's becoming clear is that the relationship between crypto and the rest of the world is changing. It's not just tech versus the state anymore. It's becoming part of the system, whether we like it or not. And in moments like this, where the headlines slow down just enough, you start to see where real conviction lives. Not just in the price action, but in the team still building, the community still showing up, and the users who don't need a bull market to care. Crypto didn't stumble this quarter because the tech broke. It stumbled because the world around it did. Trade tensions, interest rate pressure, and policy missteps created a wave of uncertainty, and crypto, now tightly woven into global markets, absorbed every inch of it. But that doesn't mean the story is turning bearish. If anything, we're past the noise and into something more foundational. The DOJ stepping back from prosecution first enforcement isn't the end of regulation. It's the start of reframing it. Bitcoin's identity crisis isn't a flaw. It's a symptom of a maturing asset class still figuring out where it fits. And the market sensitivity to global headlines, that just confirms what many still underestimate. Crypto is now part of the broader system, whether it likes it or not. The builders and traders who last through this cycle won't be the ones chasing pump narratives or running from volatility. They'll be the ones who see the transition for what it is, a shift from isolation to integration, and adjust accordingly. What is your take on all this? Do you think regulation is finally heading in the right direction, or are we just in the eye of the storm? Let me know in the comments. I'd love to hear where you think this is all going. If you found this breakdown helpful, make sure to drop a like, subscribe, and hit the bell so you don't miss the next one. Thanks for watching, and I'll see you in the next one.